All right, I'm just going to test my volume. Great. Okay, so let's start off this session here with DXY. Okay, I have a table of contents that I'm going to go through. So first off is it's DXY. All right, so this is the yearly chart, 12-month chart of DXY. Okay, and as you can see right here, like we're heading towards the end of the year, and if this candle closes like this within this range here, okay, the previous year's range, it's going to be a inside candle. Okay, so if you study ICT, inside candles are usually what do you call it? Are usually created before a huge move takes place. Okay, so moving on into 2024 and so on, I'm expecting a huge move for the XY. Okay, and right down here, as you can see, we have a yearly BC right here. All right, it has taken sell stops down here, right? But it has only taken out one and two buy stops. Okay, so here you can deem this as the third one. So right now, what I'm actually looking at is if DXY it's going to expand higher. Okay, and I am going to lean on that expectation until I am proven wrong. Okay, so at at which point would I be wrong is if this down close candle here, right, is traded through. Why? Okay, take a look at this. This two down close candle is the one that took out the lows here. Okay, the equal lows here. I'm going to use these two as the bullish order block. Okay, right here, bullish order block. And this particular candle right here traded down into this order block, bullish order block. Okay, and subsequent candles, we have this candle right here closing above this candle's high, right? So this is a proportion order block, a potential proportion order block, right? So for proportion order blocks, usually when it leaves and comes back down into, with this candle, we can use the high, the consequent encroachment, and the opening price. So these three levels here should be really sensitive in terms of sending the price higher. Right, so if we close the year like this with this fair value gap here, I am personally expecting a stop hunt for this year's low. Okay, stop hunt below this year's low, and then we continue to rally for a higher time frame objective right up here, which would be 121. Okay, 121. So heading down into the monthly chart, 2023 to 2024. Okay, so for the entire year of 2023, price has been in a consolidation. So according to day, trader day, right? This is Q1. 2023, it's Q1. Right, so Q2, we're going to see a form of stop hunt. Okay, and I am leaning towards this low here for the initial stop hunt, and then after which we are going to rally. So this is going to be a turtle soup low, and then it's going to happen within next year, because next year would be Q2, right? The year 2024 would be Q2. So it was something like this: stop hunt, shift higher, okay, higher here, and continuously higher, and then in Q3 it's going to come back into some sort of discount, right, before heading into this final objective right up here. This is what I'm anticipating for the upcoming years, right? So in order for this to happen, it needs to take out this swing low before going for these highs, okay? Because any stop hunts with true opens is the, I would say, it's a higher probability of a turtle soup setup, right? So this is what I'm anticipating for DXY. So let's take a look at supporting factors. Okay, let's take a look at bonds. Where is the bonds? Okay, so for bonds, we have the year closing like this. So when DXY trades lower, bonds can trade higher. We have this fair value gap right up here, CB, high, low, higher high, and then right now we have a break in market structure, right? So you can see where the low is. If you take a look at the 6-month chart, it was a previous fair value gap that was used to send the price higher. Okay, so this was the only fair value gap right down here on the way up, right? And then following we have this fair value gap as well, right? So if it is going to be really bearish, this right here would be enough to send the price lower, because this is a inversion fair value gap. All right, and if you take a look at the yearly highs, it's right within this BPR as well, or inversion fair value gap, right? So for bonds, if you take a look at the monthly chart with the higher time frame levels marked, the year 2023 was more like a accumulation instead of a expansion, because you reference the opening price right here, okay, and then to the closing price right here. Okay, the opening and closing, it's really tight, okay, the range from the opening and closing. So I wouldn't use, or I wouldn't say that or see this as expansion, okay. And then that we're going to head into Q2, and I'm gonna expect something like this: stop hunt this high here, maybe into this fair value gap down here, CB, with this auto block, and then it's going to send the price lower, and then it's going to continue lower, right? Because ultimately we have the lows down here, right? They're relatively equal, and I think that is the next objective for bonds, okay, bond prices. Because if the dollar is rallying, bonds should perform inversely. So this is one of the supporting ideas, right? Next, we have the interest rates. Okay, so we have the 10-year US 10-year interest rates. Right, take a look at the yearly chart. Same thing here. You have stop hunt below this low and a shift in market structure with a fair value gap. Okay, within this fair value gap, there is two down close candles. This is your bullish order block, and we have a breaker. Okay, so I am going to use the wick of the breaker as potential reversal points for next year. Okay, so heading down into, right before that, I'm gonna mark out this relatively equal highs, right, right up here, and then I'm gonna go into the monthly time frame. So as you can see right here, the highs are almost equal. So I think that is going to be the next draw on liquidity. And because on this move up, we didn't have any stop hunts, right, on the monthly chart. Okay, there wasn't any swing lows taken out. So we are going to take out this swing low here, and then we're going to reverse higher. So this is going to be a turtle soup setup once again. We have a small BC down here with this order block. Okay, this bullish order block. I'm thinking this is going to be the reversal point, right? The low of next year. And as you can see, similar to the bonds, you use the opening price right here and the closing price right around here. It's not really of it's not really a expansion profile. Okay, to me this is just accumulation profile, right? Right down here, Q1, Q2. Opening price of next year is Q2 for the 4 years. Okay, so 2023 to 2027. Right, so we're gonna expect stop hunts after true opens below a swing low, and it's gonna gravitate higher, and eventually in Q3 we're gonna have distribution. Okay, so this works out similarly to the dollar, the DXY. Okay, and if you take a look at for example, USD to JPY, on the monthly time frame, we have relatively equal highs up here. Okay, relatively equal highs. We have a BC here with this breaker. Okay, we have the breaker here as well. So right now, it's more like a bullish structure. Okay, if we close above this breaker, closing price above this breaker would be enough to justify higher prices, and we can reach into this swing high here with this CB. And because this area here, it's the fair value gap that took out this low. Okay, so this is a higher probability fair value gap. It took out two lows, actually, 1 and 2. So returning back into this area here is not going to be bullish for the entire higher time frame trend, but there's a likelihood that price is going to reach up into this area for turtle soups. Okay, so this is USD JPY supporting higher prices. So that means because USD it's at the front, it also means that dollar might, I mean, it's going to indicate that dollar is going to rally if this is bullish. Okay, right, we have another one, USD CAD. Same thing here. Even though we are respecting this CB right down here, the moment price traded up above this swing high here, this becomes a low probability city. Okay, because right from this high to this low, we are already in premium, and price is starting to close above premium, and it's spending very little time below discount. Okay, and then right down here we have the previous leading range taken out as well. So reversing back to the high that made this low here, it's a very the probability is higher. Okay, so right here we also have prices suggesting higher prices. Okay, we also have the chart suggesting higher prices, right? So across the board, I'm still bullish for DXY until proven wrong. Okay, and for that to happen, it's going to take a while on the higher time frames, but DXY can retrace all at once because it has the entire fair value gap down here on the yearly. Okay, let me just remove the drawings. It has this entire fair value gap here for it to retrace into, and even up till the opening price of this down close candle. Okay, so now that we are done with DXY, the bonds, and the treasury yield, I'm gonna move on to gold. Right, so for gold on the 12-month chart here, we do have this swing low. Okay, and let's see. Because we have taken up this high here, I'm expecting some form of retracements to take out a swing low. Okay, now let's take a look at the 6 months to see if there's anything that I can utilize. Right, so as you can see right here, prices is not closing above this high. Okay, the previous all-time highs. It's not closing above it. And in fact, this candle would be the first to close above this high here. But right up here, after sweeping all these buy stops, I think it's going to reverse down lower into the sell stops down here. Okay, so we have the low that took out the highs, and then for retracements, it's going back to this low right here for a higher time frame stop hunt on the yearly chart, right? And let's take a look at the chart here. Okay, on the 3-month chart, it looks bullish, right? So in order for it to go lower, I need to see closing prices back below this all-time highs, which we have around 2 weeks left. So I don't think we're gonna get that, and if that's the case, then we might have a scenario whereby gold and dollar rallies together. Okay, which means the world is gonna be in quite a troubling state if that's gonna happen. Okay, so in that case right here, if gold is not going to perform inversely with DXY, you know what's going to expect when you have your expectations. And let's see how the gold plays out. Okay, so right now still bullish on gold, but just have to be cautious. Okay, so next up we have US oil. Right, so for the 3-month chart, gold seems, I mean, the oil chart seems to respect this BC here. Okay, this is right now a BPR after taking out this highs, and it's digging deeper into this breaker here. Okay, so low, high, lower low, the high that made this low here, this up close candle here, it's your breaker. And let's take a look at the 6 months chart. Right, so this is the breaker itself, and it seems to be wanting to reach into this fair value gap down here. Okay, this fair value gap coming right around at 61. So if that's the case, for the next year, we might see a drop in inflation, okay, in the initial part of the year. So let's take a look at 12-month first. Right, so we might see a stop on here, okay, because right here we have a bullish um, fair value gap, and if it drops down here, it needs to react fast and not start to trade below this high here. Okay, that will be your invalidation, and if that's the case, it's going to trade into the consequent encroachment of the wick down here. Okay, it can go that low for all. So let's head over to the 6 months. So best case scenario, if you're bullish on oil, which I am, I would like to see a stop hunt down here. I mean, stop hunt below this low, and then reverse from here onwards. Okay, and if that is the case, we might get, it might indicate that we have a stronger argument, all right, and a stronger possibility and probability of things happening around the world, because um, higher prices for oil means higher inflation, and higher prices of gold means um, unstable times, and higher prices of DXY is the same thing as gold, but gold and DXY are basically treated as safe haven right now. So if anything pops up in the world, uncertainties and some black swan events, everything's gonna rush into DXY and gold, and that should justify higher prices, and higher prices of those assets should signal troubling times coming. Okay, so this is what I'm seeing right down here, because for oil, it has taken out this lows here. Okay, I don't think that it's going to go down below this lows again, right? It has taken out all the sell stops, and right now it's going to run for buy stops as it did right down here, and this high here. Okay, this swing high basically added more orders up here. Okay, more buy stops, and if that's the case, it's going to run above this high with speed into this high eventually. Okay, eventually, this is a 6 months time frame, so it's going to take a while to play out. Right, so this is for oil. Okay, next we have food. Let's go through food commodities. $12-month. Right, we have a stop hunt here. We might want to do some retracements, and if you use this, we might want to attack the highs again, right? If you use the projections. Okay, um, there's a problem with commodities here, because some of them made higher highs, some of them lower highs. Okay, so this is a higher high as well, from this swing high to this high here, right about 2.5. Okay, makes lots of sense here. the projections even on the higher time frames. Okay, and this is coca. Right here it made a lower high. Okay, for this soybean it made lower highs. Right. For this one, soybeans, I think this fair value gap, because this is a inversion. Okay, if you take a look at this right here, this level was used to take out this swing low. Right now it has traded through and it has created a BC. Any price into this area here should send the price higher, okay, to take out this equal highs and maybe into that 2 to 2.5. Corn futures lower highs as well. Okay, the last stop hunt on the macro scale would be here. Okay, barely touching the -2. Okay, and we're trading right into a BC. Right here we have relative equal lows. So if it wants to trade into this area here, it can do so, but it needs to react fast, aggressive away from this level here. Okay, this level is this BC that I'm looking at. It has relative equal lows as well, right? But best case scenario, it does not trade into this area here for higher prices. Okay, um, for wheat, higher highs here looks like it's stop hunt. Right here, the last sell stops taken was this. Okay, we're missing just a little bit here for the -2 standard deviation. So we're trading right into the last down close candle here. Okay, this order block, this bullish order block, right? So if inflation is going to rise, food prices are going to rise as well, and we might see some reaction off of here. Okay, so far they are supporting the price, I mean the idea of inflation or higher inflation. Okay, and due to higher inflation, there will be a reason to increase interest rates. Okay, so that's one of the supporting ideas, right? And now let's move on to HSI. Done with food. Okay, so HSI, it has taken two sell stops here, and it has closed. I mean, it's going to close below this low here, I am thinking. Okay, what else? Oops, this fair value gap here was used to send the price higher before. Okay, so as you can see the reaction down here, look at the bodies of the candle. So with that in mind, I'm going to use this low here as the low that made this high. Okay, and if that is the case, it might want to run for the rejection block of this lows, of this swing low in particular. And in that, if that's the case, we're going to take out the low down here for HSI. And so far on the way up, there wasn't really any sell stops taken except for this. So this was the last sell stop that it has taken. Right, so using the fibs here, it basically missed the 2 to 2.5. Right now it's having the retracements already. Okay, so for this high to this low here. So this is the previous dealing range. Okay, right? I'm using this because this was the last low that purged a swing low, and then right here the last high before it was purged and reversed. Okay, and right now we are trading into discount of the previous dealing range, and I want to see if it wants to reach into the 25th quadrant of this lower half of the discount range, which would be right around here. And if so, would it want to run this low out? Okay, because as I've mentioned before, this two candles was utilized to take out this high here. Okay, because there wasn't any stop hunts below these two candles prior to the run above this, but it was supported by this fair value gap. So still anticipating lower prices for HSI on the macro time frame. Right, so HSI, let's move on to finally indices futures. Let's start off with NQ. Okay, so for NQ, let's take a look at first right here. I want to see how we close this here. Okay, I want to see if we close below this swing high. This is important. Okay, so let's go head over to 6 months. Right, 3 months. Okay. Yep. So the closing price is important if it is above or below this swing high. So this was the fair value gap that was utilized to take out this high here. This was the low that made this high. Okay, if we are expecting higher prices for dollar, naturally we would expect indices to fail. Okay, to trade lower. So with that in mind, let's map out the quarters. Okay, so the opening price of next year would be very important. Okay, so best case scenario, right? The best case scenario is that as DXY it's trading lower into that yearly fair value gap, NQ it's gonna rally higher, maybe into this 2 to 2.5 standard deviation from this swing low to this swing high. Okay, so I'm expecting higher prices for the indices, right? Because we are expecting DXY to retrace. I'm expecting, not we, but I am expecting DXY to retrace. So if DXY retraces into that yearly fair value gap, we are going to have prices extending above into the 2 to 2.5 standard deviation, and that will be true open high and higher. So if we get something like a stop hunt, let's say on the weekly, because we have taken out this high here, if we get a stop hunt down here, I think that would be great for higher prices for the first half of the year. Okay, and after April, or at the start of April, we are going to have the true open of the year 2024 itself. It's going to give us a stop hunt on the highs, and then we're going to reverse. Okay, so let me just map this out for you. Right, so March to April. Okay, and start of the year. Right, so let's just say we are trading right up here in the first quarter. Okay, we're trading all the way up into this area. So parabolic price action all the way up here, and then we are going to make a SMT high on either the daily, or the weekly, but I'm thinking it's going to be the daily SMT highs. Okay, oops, SMT highs here. So I'm gonna assume Nasdaq is gonna make a higher high. Okay, April's opening price is going to give you that Judas swing, and once it does this, we can trade back to this level here. Okay, or at the minimum 1 to 1.5. There's going to be a PD array within this 1 to 1.5 that we can trade back into, right? So that is what I am expecting for Nasdaq. Okay, so the minimum requirement is that I want to see SMTs. Okay, against the other two indices, Dow Jones and ES, but best case scenario ES. So right now ES is the weaker indices among the three. So I'm expecting ES to make a lower high as compared to Dow Jones and Nasdaq. Okay, so this is, I think, going to be um, spring. Okay, um, it could happen in March, right? I'm not gonna discount that because 2024 it's U.S. election year, and basically, according to Day, it's manipulation year. So if you look back all the years of manipulation in terms of like all the years whereby US held their elections, you're gonna see huge volatility within the month of March. Okay, so for example, the last election was 2020, February, March. Okay, and then 2016, 2016. This time around we have in February, okay, and then March. So February took out the low here, 2016, right? And further down we have 2012. 2012 it was Feb, May, March, and then we have a stop hunt in May. I mean, not stop hunt, but a retracement in May. Okay, back in 2008 we have January, and we have a significant high made in June, right? And right down here, 08, 04, 04, April, and March down here. Really nothing much here because of this huge expansion. So consolidation is expected after expansion, right? Basic concept there. So year 2000 as well, right? 2000 was one of the US elections because it's every 4 years. So 2000, right up this high, it was in March, okay? And then April, and then moving forward. So if you see the patterns here, if you take a look at all the so-called black swans, it's always in, or most of the time in US election years, okay? And if we have a huge expansion like this, of course, for the following US election year, it's not going to be like a I mean, it's not going to have a significant move. So right here, 2008, okay, and then down here, the next election was 2012. So 2012, really nothing much as compared to this right here, okay, and the previous 2020, we have a huge run here. So the next election here, let's see, okay, because you have to factor in the time as well. So during these periods of the years, maybe the system wasn't that effective in terms of the algorithm, okay. um, it doesn't matter whether you believe it or not, but I'm using I'm drawing a framework that I believe in the algorithm. So I'm gonna say that, in my opinion, just my opinion, during these years, the algorithm have somehow rather became more efficient. That's why we can see huge moves like this happening to and fro, okay? Instead of a long sort out consolidation before another run. So it's going to be, I mean, the market is only going to get faster when the efficient bumps up, okay? Because we are having better technology now, and that justifies the algorithm becoming more efficient. Okay, so when algorithm is becoming more efficient or has become more efficient, we get larger price runs at a greater speed, right? So that's what I think, and let's see if it plays out as I anticipate. Right? Don't really have much expectations for 2024 because of the fact that we have a expansion in Q1. Okay, expansions in Q1 usually lead to a low probability Q2, and then we're going to have a high probability Q3. So Q3 is going to be 2025, right? And hopefully we get to see some sort of a blow off top in 2024. That would be our Judas swing in Q2, and then we distribute lower in 2025. And at the same time, you have to factor in that 80-year block, okay, that Day was talking about. So the 80-year block, right? If you count it from the last huge world war that we have, it's 1945. So you add 80 into that, that's going to bring you to 2025. So we are at the very last of the last, okay, which means Q4 of Q4 of Q4. Okay, so Q4 of the 8-year block, Q4 of the 20-year cycles within that 8-year block, and yeah, so because we have this huge expansion, right, before that, what do you call it, from 2020, okay, let's just say 2005, right? We have this huge expansion here. I think it's going to reverse pretty soon. Okay, let's see if this plays out, right? It's going to be interesting, but let's see if this plays out, right? So let me just double check and see. Take a look at ES. Right, nothing much here. Pretty similar. Okay, so ES, if you want to know how far it's going to go, just basically use this projection here. It's going to give you the price range, and because we have close above 2.5, reaching down into this level here for your entry into fourth standard deviation, that would be your low-hanging fruit. Okay, and obviously we can have something like this, okay, whereby it doesn't reach that level in Q1 of next year, but somehow or rather it's going to um, glide lower, and then we are going to have a stop hunt below that April into the highs here. Okay, that is very possible as well. Let's see how this plays out. I'll have to wait for Q1 for more details before I can um, anticipate what's going to happen in for the rest of the year, basically. Okay, and I need to know the opening price, the true opening price of 2024 as well. That's going to be the opening price of April. So just keep in mind that overall in the macro time frame, we are in Q2, and throughout the year, let's see if Q3 of Q2 provides the best setup. Okay, so far in London, that's how it is, and in London session and in New York session, that is how it is as well. But it can truly break down in Q2 instead of Q3. Okay, and in Q3 is just going to be like a retracement back into some PD array formed in Q2 and further continuation. Okay, to the downside. So um, because I'm not drawing anything here, so just try to understand what I'm trying to say here. And if we close the month like this, right, well, what PD arrays do we have for higher prices here? Okay, we have these three down close candles here. This three down close candle is going to be your proportion order block. Okay, so similar to NQ, right? Oh, this is interesting. So similar to NQ here, we have this three down close candle, but the only difference is that for NQ, this is not your proportion order block. Why is that so? Because it did not reach into this low here. I mean this down close candle here. Okay, right? As you can see, the highs, it's not tapped into. Okay, so there's um um two things that you can observe from here. Okay, Nasdaq is way more bullish than um ES, right? It's probably not going to need this um bullish order block here to send price higher. Okay, but if you take a look at ES, it has basically traded down into this last down close candles that took out this low here. Okay, so if you want to strictly use one candle, that would be this candle. Okay, but this candle took out this low here. Okay, but we have a consecutive candle right beside it, so I am going to factor in this candle here as well, and I'm going to use the wick of this candle to the opening price of this candle. And for mean thresholds, I'm going to use it like this. Okay, from the high to the low. And if you're just only using the bodies, it's going to be this, anchoring to the closing price of this candle here. Okay, so this is going to be the last down closed candle that made this run higher. And whenever you have that on the higher time frames, you expect this down close candle to be sponsored. Okay, so if you take a look at ICT's core content, you'll find this concept here. So institutional sponsorship is going to come in right within this down close candle, right? As you can see right down here, basically the opening price tagged and reversed. Okay, so right now this three down close candles, because it has reached into the last down close candle here. Okay, you need to listen to this carefully. For proportion blocks to qualify, okay, you need down close candles that tags into the very last stop hunt down close candle, and then you need a closing price, a green candle above the high of the entire proportion of the block. So right down here we have consecutive three candles then this consecutive three candles is going to be the entire proportion of the block. Okay, so any price return into this proportion of the block, you want to see immediate reaction. Okay, so because we don't really have a wick for this, a premium wick for this proportion of the block, the highest probability is going to be the opening price of this of this down close candle, and the very last resort would be the mean threshold of this entire range right down here. All right, so basically, if you just put a middle line here, okay, this would be your mean threshold of this proportion on the block, right? So these two levels must offer a aggressive reaction away, okay, away from this range, right? Proportion order blocks are one of the strongest PD array in ICT concepts in terms of price action analysis. Okay, so I use this often, even on the lower time frames. Okay, let me show you an example. Just yesterday, and I think 2 days before, there was this example. Okay, right. So let me just show you on Nasdaq. Okay, right down here. Okay, you have this highs relatively equal highs. Okay, and at New York local time, New York session, sorry, 9 to 12. Oops, New York AM session, right? 9 to 12. But basically it's 6 to 12, but I'm using the Q3 and Q4, so it's going to be 9 to 12. Okay, price traded above, right? As you can see here, this candle here, this last down close candle. Let me just turn on this replay button for cleaner charts. Okay, so this last down close candle took out all the sell stops. Okay, and then price closed above this candle here. So this validates this candle. I mean this candle right here. Okay, this up close candle, this green candle, huge green candle here, validates this down close candle as your bullish order block, the last bullish order block before the run. Okay, right beside the green candle, we have one down close candle that reached into the opening price of this bullish order block. Okay, and this green candle here validates this as your proportion order block. Right, so this up close candle here, down close candle here, this is your proportion order block. So you can see how price reacted off the highs. Okay, let me just draw the opening. It didn't really touch the opening price, almost it did right down here on this candle here, but basically every time it tags the high, strong reaction away. Even on the last hour, on the lunch hour, strong reaction away. Okay, so this proportion order block was used to send the price higher into a higher time frame objective up here on Wednesday's high. As you can see here, as long as you have a clear draw on liquidity, you can use the proportion order block as your entry. If it has a long wick like this, you can use the high. If it doesn't have a long wick like what we have on ES, you can use the opening price. And when you enter in a proportion order block, you do not want to see price action trading against you in um, trading against you aggressively. Okay, so this is one example here, proportion order block. I'm gonna exit the replay here. Okay, let me see if I can find another example. I think it's on the CPI day. Yep, right here. CPI day. Okay, same thing down here. These two down close candles took out this low. Okay, took out this swing low as well, and this low here. And price closed above this candle here. So this green candle, okay, if you are clear on the draw on liquidity, right? So context and narrative still comes first. So you're bullish because we have a all-time highs to reach into, and this is CPI. It's going to be manipulation. Okay, all this context and narrative in place. This up close candle would validate this as your last down close candle, and as you can see, price just tags opening price here once and twice, runs, and then this down close candle here. Okay, you look at the opening price of this down close candle. Okay, so basically, because CPI was manipulation, you're anticipating this 830 highs to be traded to knock out everyone who thinks that we're gonna reverse. Okay, so traders are gonna rush into the markets thinking that okay, we're gonna short this entire market due to the CPI price action, and then their stops are gonna be right here. Okay, so this down close candle here traded into the last um, bullish order block after this has been validated as the last bullish order block. Okay, and this green candle here, okay, let me highlight it to you. This green candle here confirms this as a proportion order block. Why? Because it has closed above the high of this candle here. Okay, the high of this candle here closed above. Okay, look at the past two green candles. It did not close above the high. Okay, so once this has been confirmed as the proportion order block, what you can do is, because it has a huge wick, okay, this is a long wick here, you can use three levels: the high, the midpoint, and the opening price. So opening price was tagged, and then you can see this aggressive reaction weight, and then right on the very next candle it tags the high, and then it runs. Okay, so this is the type of reaction you expect for order blocks. Okay, any closing prices below, okay, the mean threshold, right? Oh, right at the opening price is right where the mean threshold is. So the mean threshold of the proportion order block, you do not want to see any candles closing above. I mean, in term, if you're bullish, you do not want to see any closing body closing below the mean threshold, and if you're bearish, vice versa. Okay, and when a candle closes below that mean threshold of this proportion order block, it becomes a lower probability, a low probability proportion order block. Okay, let me show you what that looks like. A low probability proportion order block. Okay, so right down here. Okay, so as you can see, price traded above the high. Okay, and then trades below. We have this green candle. This is a bearish order block trading up into this last green candle here, right? And then prices closed below here. So this down close candle validates this as your proportion order block, right? But keep in mind that sometimes you can utilize one candle on lower time frames, okay? But the best case scenario is that you need to factor in the consecutive up close. Okay, so this is where initially, as I was starting to test this proportional block, I realized that if you don't really have this um, full closing below, like let's just say this order block, okay? In order to validate the very last order block, you would want to use the consecutive up close candles here as your bearish order block. So right at this point in time, you don't really have any prices closing below the low here. Okay, right up till this level here. Okay, this candle here. So this becomes problematic, right? You may see this last up close candle as your bearish order block. Okay, it is, right? It is, as you can see, price respected it, right? Did not trade past this bearish order block before lower prices, right? So right here, you see that price was trading and closing above this proportion order block. So let's just say you enter at the opening price here. This candle right here basically tells you that it's going to run above this high. I mean, run above this swing high here. Okay, this closing price of this candle. So if that's the case, when you have such scenarios, anticipate a probability of a high resistance liquidity run. Okay, this is a separate topic already, but in terms of proportion order blocks, once it closes the mean threshold, this somehow or other makes it a low probability, and it could potentially invalidate this as your proportion order block. All right, so you have to be very clear about this on how you use proportion order blocks and the higher probability ones as compared to the lower probability ones. Okay, you can just look at your charts for examples. I'm not gonna run through all the examples. Okay, and as you can see right here on the 15 minutes, this right here seems like a proportion order block, but in fact, if you take a look, it did not trade up to this high. Okay, the green candles are not touching the, I mean not high, but the low of this last bearish order block. So that sort of invalidates this, I mean these two candles as your proportion order block. Okay, and what happens is that, as you can see here, it ran through this swing high. So same thing here on just on the 15 minutes, right? Because right here you have equal lows, and you technically you're expecting it to hit it, but eventually it did not. So problematic price action for this example here. All right, but anyways, didn't really mean to dive into that proportion on the block thing, but just showing you some examples on how I utilize that. Okay, so back to ES. Let me just take a look. ES macro 3-month. Hold on, 1 month. Okay, so I'm interested to see this candle's close and how it reacts next year. Okay, so because as I have mentioned before in my earlier analysis of DXY, I'm expecting DXY to give retracements first into that yearly fair value gap. Okay, so when that retracement happens, it also means that indices is going to rally further. Okay, so for ES, I'm anticipating retracements into this and then higher prices into -4 standard deviation, right? Which coming right around at 5,271-ish. So this is my bias for the first half of the year, right? It's going to be bullish for indices. Okay, let's see. Is there anything that I missed? YM here. Kind of choppy. I don't really see anything, but let me just pull up the fibs. Okay. COVID lows. Well, is it gonna reach that high? I'm not too sure, man. But I don't really have a good read on Dow Jones, so I'm just observing. Let's head back to NQ. Just double checking. See if I missed out on anything. Alright, I think that's about it for my outlook for 2024. And moving forward, I'm just gonna let me just give a brief run through on what I'm anticipating up to 2027. Okay, I'm gonna just base it off of on DXY, and you can work out the rest. Okay, so DXY, let's use a 3-month chart. Twenty 2024, 2025, 2026, and lastly 2027. 1, 2, 3, 4. So 4 quarters. 2026 being the last quarter. Okay, let's head over to the monthly. I'm gonna briefly outline the roadmap. Right? Accumulation, manipulation. Okay. Usually it offers a short run before the final distribution here. Okay. Somewhere around here. Just ignore the price, okay, and take note of the time. Okay. Distribution. Then we see some for a blow off top here. Okay, this is what I'm anticipating for the dollar on the macro time frame here. Right. Okay. Okay, so your AMD here, power of 3, same shit, right? Accumulation, manipulation below the low of Q1, and then distribute above this highs here by Q2, okay? And then Q3 continuation higher into the higher time frame objectives. And once it got there, once it reaches there, Q4, it's going to be a reversal. Okay, this is going to be a span of 3 years moving forward. Okay, 2024, 2025, and 2026. So 2024 to 2025, we are going to see index futures crash That is what I'm expecting. And then after that crash, I think it's going to crash even lower due to the fact that at this point in time, something's going to happen. Okay. Um, if you remember what ICT says that dollar and the index futures stock markets are going to crash together. So let's see if it plays out. Okay. He said it in one of his Twitter spaces, if I'm not wrong. But if that holds to be true, this is what I'm expecting. Right. Not fully basing off of his idea of how it's gonna play out, but I think for DXY, this is how it's gonna play out, and something significant is gonna happen in the US, I assume, because we are right around the end of that 8-year cycle. So if shit is gonna go down, everything's gonna go down together. Okay, because that is gonna be a quite a quite a big catastrophic event, I would say. So the time frame is 2 to 3 years time. All right, and let's see if this plays out. Okay, my roadmap. This is my roadmap. Okay, obviously there are scenarios that can play out. Right, we can do a stop hunt here, and then we can crash below this lows here before like without hitting this target. That could happen as well. I'm not. I need more information. Okay, but right now that is the framework and what I'm leaning towards on macro time frame. All right, and as usual, every week for the next year, I'm gonna do weekly forecast, and we're gonna see how it plays out. Okay, after everything, and then I'm gonna come back to this video at the end of next year to review if what I anticipated for Q2 is right. Okay, and we shall slowly work into Q3 and finally Q4 of the last. Um, this is a 4 year, yeah, 4 year block into that 8 year block. Okay, um, all these times blocks, quarterly theories. This is all credits to Day Trader Day, Daye. You can trade it. You can look him up on the internet, YouTube, Twitter. We want to know more. Look for him, and you can sign up for his memberships where I think he is going to teach how you can forecast these things with greater detail. Okay, because I'm not going to participate in his mentorship. I'm only going to base on all the free information that he has provided, and obviously it is more than enough than you need to be profitable. So with this, I'm going to end with one last note, right? One last thing that I want to mention is that in the year 2024, I'm considering, okay, this is not confirmed, but I might do a full on transparent live stream top step challenge using only the 5 or 15 minutes time frame with all the concepts that I apply for my trading. Okay, this is not confirmed, but um, I'll see how it goes. Okay, if I do it, I do it. If I don't, then I don't. Right? This is going to be live streamed on YouTube. Okay, and it's going to be a 50K challenge from Top Step, and rules is 5 minutes entries, 5 or 15 minute entries only, so you can forget about the 1 minute charts and the micro cycles. Okay, but 5 to 15 minutes only, and I am going to see, or I'm not going to show you, but I'm just going to share how I approach trading. And it's not like this is the only way you can do it, or is the way that you should do it, but it's just sharing. Okay, I'm just sharing at no cost, completely free, and I'm gonna see how far I can take this challenge here. Okay, and you can get to see the results at the end of every week. Basically, the weekly forecast, I'm gonna review, or I'm gonna present that top step chart. Okay, of the weekly P&L, like how many days that you traded, and then the profits and losses, and then how many trades you've taken, what are the all the information. I'm gonna show it except for that account number, obviously. So all the statistics that you want to know from Top Step itself. So you get to see them all every week moving forward. Okay, so I am thinking if I'm gonna do this. I'm still thinking, right? It's not confirmed because I am going to be quite focused on my live account next year. Okay, right. So with this, I am going to close this session. Right. I hope you enjoyed it, and if you gained any insights, do feel free to give me a thumbs up. Right, that would be a good encouragement. And if you have any comments, leave them in the section. I mean, in the comments section down below. Right, and um, if you have any questions, you can leave them in the comment section down below as well. Okay, and with this, I am going to close the session here. And before I close, I saw this tab here open about Bitcoin. Okay, so because I'm going to be bearish for the first half of the year for the XY, you can map out the Bitcoin yourself. Okay, so this should be easy, right? Just inverse everything that I've said for the XY, right? Um, but don't take it as high probability, alright? Because crypto moves on a different time scale, or on a different time rules, okay? Or not rules, parameters, okay? That's the correct word, parameters. Alright, so thanks for watching. I hope you have a great weekend, and I'll see you in January, the first week of January, the first weekend. Okay, let me just take a look at the date. Because I'm going to be taking a break from trading, I'm not going to be trading in the holiday season. Okay, so the first Saturday of January, that's going to be 6th of January. So on 6th of January, I'm going to review the yearly close, right? It's going to be a shorter version of this current session, right? And basically just confirming everything that I'm going to um, use as PD arrays and whatnots, okay, for the 6th of January. But mainly, I'm going to be only focusing on index futures and probably the XY as usual, right? And I'll officially begin my usual schedule after 6th of January. Okay, so I'm going to be taking right around like a 3-week break. Okay, and I'm gonna close it right now. It's been 1 hour and 80 minutes. Okay, and see you in the next session.